And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
And a fine morning to all my futures friends and family. It's time for the market prep. Wednesday, January the 25th. Focus on context, risk management, patience, and remaining centered in our trading today. If you are already in the market, and I see some of you already are, hopefully you've got things going your way. The market's on the move this morning. Got about 3 inches of snow here already. I've already done a little bit of shoveling and playing out in the snow with Lacey. It's about 30 degrees. We're supposed to get a whole bunch of snow over the next few days. Hopefully not too much. I don't enjoy shoveling that much, but I do have a snowblower in the form of a 23-year-old son. What's going on in the markets? Well, there's not a lot of economic numbers due out today. In Great Britain, the CPI and PPI numbers both came out lower. The Bank of Canada is supposed to raise their rates today approximately by 0.25%. We won't know that until 9 o'clock Central, and at 9:30, of course, we have the EIA crude inventories. Looking for a just under 1 million barrel boost after last week's 8 million barrel boost. Crude pricing hanging right around that $80 mark. U.S. stocks are set to open lower after Microsoft earnings showed the slowest revenue growth in 6 years. 3M shares are down 6% this morning. Microsoft also saying they're seeing more trouble ahead as far as earnings today are concerned. They're all over the map. There's good, there's bad, there's ugly, and there's pretty. Abbott Labs beating on both, AT&T mixed, Boeing missing on both earnings per share and revenues, and ADP beating on both of them. We're also looking forward to some after the close today in the form of Tesla, IBM, and CSX, the railroad company. Crude prices again balancing right around that White House $80 mark, where they're saying they're going to now start replenishing the strategic petroleum reserve. That might put a floor into crude oil. Only time will tell. The VIX this morning up almost 5%, but still right around 20 where it was yesterday, 20.11 last time I looked. The dollar index up slightly, 101.99, still hanging around that 102 level. And the yield on the 10-year down a little bit this morning, 3.43%. So take that as you will. As always, I ask that you like, share, comment, question, feedback, heckle, and love are always welcome here on the Market Prep. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Events today. We've got the first half of a 2-day webinar at 12:30 today, market profile and the auction process. You're going to get a basic overview of the market profile today. Tomorrow we're going to be talking about the factors of the auction process and a little bit of how I organize that information. And after tomorrow, I think we're going to be sending out a little gift for everybody. I call it the Market Performance Worksheet. It's a basic worksheet that I use and that I've put together for coaching clients so that they can kind of get themselves organized. If you watched the coach's playbook yesterday, we were talking about consistency. We all would like consistency from the marketplace, but many of us do not bring consistency to the marketplace. And this market performance worksheet can help you prepare for the trading day. It's something that I expect you to make your own. This is just something that I've put together to get you started with that. but it's going to help you look at the profiles, read what the profiles might be telling us. And, the profiles aren't signal indicators. They're context tools. They're there to organize the information in a different way to let you be able to assess, to hypothesize what they're telling you, and hopefully get you in the right positions and keep you away from some of the bad positions, of course. So I'm really looking forward to spending time with you in that regard today at 2 o'clock. Again, we are going to be having the Make Hogue Money, the late session. We made a little bit of money yesterday, which was nice, of course. The second link is for Make Hogue Money, I think. So we're looking forward to a good day today as far as some trading, some education, some knowledge, and we'll see if you guys can use that knowledge to make me some money at 2 o'clock. And then, of course, we'll end the day with the market reflection. Always a nice thing to do. Just kind of sit back, relax, take a look at what the markets did, and think about what things are going to look like tomorrow. So tomorrow is our big day of economic releases. We're looking for durable goods and GDP and international trade in goods and jobless claims all coming out at 7:30 tomorrow. All of them can and will probably be impactful tomorrow. New home sales at 9 a.m. Central tomorrow, also possibly impactful. And then after that, we've got the nat gas numbers. So lots going on in the markets, lots going on outside the markets. Let's see who's with us today. Timothy Marks is the first in the room, beating the rooster. Timmy's the first one in the room. He wins the prize. Good morning, Shaw. Good morning, Rooster. Theo, always a pleasure to see you. Caesar, Caprice, Brody, it's good to see everybody as always. Stephen Carlson from Atlanta. Alejandro, hopefully you're not getting any snow down there in Atlanta. Terry King, Dan Trader, Zach, good to see you. Yes, let's watch our risk today. Of course, the first thing we think about before we put on a trade is, where does price prove me wrong on this, and can I handle the risk? Caesar, good morning, White House. Bill Phillips, good morning. Rusty Golfer, my spirit animal, it's good to see you. Don Clemens, Sarah Hall, prayers and love to you. It's always a pleasure to see you in the morning. Jason, George, Lacey was already out frolicking in the snow. She's chomping at the bit to get back out there. I'll probably take her out for a few minutes before the equity open. Maybe if I can get back in before then and make sure that I'm prepared. Then maybe we'll see some action today. Peter, good morning. Anthony, Great Dane, good morning. John, Kevin, good morning, sir. Serenity Trader, good morning. Vince, my guy. Haggle Matters, Andy, Marcelo, Shaw, $80. Thanks, Joe. Right. Looking to buy 100 million barrels would tell you their price point. I know, right? Why would they do that? It's just... that's the government for you, right? Dan Trader, Alfred Scott saw and he conquered. Chef Buffet review was super helpful, yes. I like Dan's kind of an analogy towards that. Actually, Jackson and Dan was like, no. I'm not assuming, what's the best thing to eat on the buffet. I'm eating everything, but that's different than actually trading, right? Dark Heaven, good morning, Will. Charles March, Dowitzer, Rob T, good morning, Emo. Jay Brayman, good morning. Razmik, Zerain, good morning, everyone. If I saw a couple of names I haven't seen, they're welcome to the market forecast. If this is your first viewing of the market forecast, market prep, I should say. I keep saying forecast. We've changed it to the market prep because we can't really forecast anything in trading. All we can do is prepare and trade what we see. So welcome. If it's your first time just saying hello, thank you for saying hello. We are going to head into the charts here pretty quickly. We know we've got the market profile and auction process webinar today and tomorrow. We've got Make Hogue Money. After that, We've got the reflection after that tomorrow morning, the early session of Make Hogue Money, and then, of course, the second part of the webinar tomorrow. Today, we usually have group coaching on Wednesdays. It's going to be, we're going to be doing the webinar instead. If you're looking for the group coaching, make sure you get the link in the chat here that's going to register you for the webinar, and we'll look forward. I've got some time for questions afterwards and anything, and of course, is always welcome as far as questions, right? Yeah, I guess you're right, Kevin. We can forecast, but we just can't predict. Good thought. All right. Good morning, Nasdaq. All right, let's jump into the charts. We're gonna step into the S&Ps really quick here because they're already in a kind of an important level that I was looking at yesterday as kind of a decent pullback level if we were going to head that way. So we've got on the continuation chart. Got to get everything straightened out here. So we are back to that important trend line that we broke out of 2 days ago. We are now down through it. Is there potential for repair from Friday's session? Of course there is. So going back to the regular daily here, the volume yesterday on that attempted move to the upside was pretty weak. There was a loss in open interest as well. So when we're thinking about the auction process, when the market is attempting to go higher, but volume drops off and we lose open interest, that's not healthy for an upside auction. So it seems to make sense even without the earnings from yesterday that we're seeing a pretty decent pullback. We've got to adjust inventory. Sometimes the market has to break to rally. We don't know what's going to happen, of course. Monday's excess on the high is looming large. This excess on the high of the daily bar here on Wednesday, is indicating rejection of higher pricing. Now, this line here on this daily chart only goes to here. It doesn't go to the all-time high. This is just the March contract here. So we're seeing contact, and a little aberration of the market from CPI, and we're still wrestling with this area on this daily chart. This doji candle yesterday, very indecisive, especially on lower volume and a drop in open interest. Staunch rejection, I'm calling it, on Wednesday. And then again, staunch rejection of any potential viewing of this as a late spike. Now, this late spike occurred after 3 p.m. on lower volume, okay? The longer time frame traders aren't available at that time to participate. Seems as though the P-shaped profile just resolved on a high as shorter time frame traders got out of short positions. That would support the idea that we lost open interest. When we have a P-shaped profile, it indicates short covering, and a drop in open interest indicates that is likely true. Jay, you passed step 2 last night. Congratulations. That's wonderful. We're looking forward to your continued success. Let us know how things go. We're looking forward to hearing good things. All right, so back to the 30. So again, staunch rejection of any an assumption of the late spike accepting at higher prices. We've got overnight inventory deeply to the short side now. You see how low the volume is in the overnight. This isn't longer time frame. This is short time frame traders trying to profit from the price moving lower, which right now they're getting paid. Overnight inventory short. We're going to be opening with a gap. If we can't close the gap, we've got the opportunity to continue to see this market moving lower. Now, this 40 to 39.90 level here was an area I was looking for opportunities yesterday. We didn't get there. We're there now. We are actually kind of moving through it. We got to see how this market opens up. There is potential, again, for more repair. These very emotional up days like that leave a lot of holes, and they leave a lot of questions as to, is there more business to be done down there? When we head back down to those levels, we call that repair. So if we do continue to the downside, my target area is going to be right down here, right around 39.50 in this high volume node. I think that's going to be enough for us to repair and then perhaps fall back into range. Don't forget, we have the GDP and we have durable goods tomorrow, and the market is going to be working on hedging and positioning. The participants are going to be finding ways to protect themselves from anything that could happen tomorrow, if anything wacky does happen. So we had our hangover day yesterday in a P-shaped profile. We've got some potential for some continuation movement in either direction here. This area here is kind of important in my view. If we can't hold above it, then we get the target down to 39.50, which is kind of a big fat round number too, don't you think? So let's take a look at the TPO chart here. Okay, this is yesterday's TPO chart. We've got 2 days of P-shaped profiles indicating short covering, which takes buying power out of the marketplace. Don't forget we had an additional open interest yesterday, leaving the spike at the top here yesterday. That's excess as well. We have the daily excess, we have the regular trading hour excess, we have the initial balance at the low of the session from yesterday. Look at where we're trading right now. Look at where our overnight low is. This area is where buyers took over yesterday and moved price higher. Are they going to come back in today? We don't know. That's why I'm kind of viewing this area here as somewhat pivotal for price action today. P-shaped profile, normal variation, extreme day. The point of control is high in the profile. We ran out of buyers here, and now we've got some earnings that are spooking the market a little bit, wouldn't you say? So again, that initial balance low is the low of the regular trading hour session yesterday. Excess on the high, excess on the low, not necessarily real strong excess on the high yesterday. But if we start to show acceptance below the low from yesterday's regular trading hour session, then I think we can come into finishing some repair down to this level. The naked TPO point of control here is 39.51 quarter or 51.50. That would be a relatively decent downside target for me, because I think that takes care of all our repair from Monday, whatever day that was. Let's take a look at crude oil now. This market is going to be fascinating to watch for a little while. 80.32, right where we're at right now. 80.13 settlement. We've got balance, central balance inside last week's high and low. Those are going to be my larger extremes to take balance-based trades. Anything in the middle here, I believe, is falling into short time frame control. We had some good selling coming in yesterday, adding 16,000 estimated contracts to a down day. So we've got some new selling coming in. I'm not sure if that's going to be a good idea, as the government is thinking about putting some support here at $80. So volume maintained yesterday. Open interest increased on the downside, but again, we're very centrally located inside of an area of balance that was created by last week's high and low. It's like our little tennis player is centrally located on the court, so that if the ball comes up here or if the ball comes down here, it can reach it and volley the ball back. Let me make sure I'm getting everything here. Let's look at the 30. So the increase in open interest on the downside yesterday, followed by positive delta. By the end of the day, the delta was up about 1,000 on a down day. A down day, you're looking at more aggressive traders hitting the bid, but delta was positive. That tells me that there's the hint here that longer time frame traders accumulated that open interest against shorter time frame buyers. It's kind of why we looked at almost a late spike at the end of the day here, because our longer time frame sellers got the longer time frame buyers too long and they had to close out their positions by the end of the day. Where are we now? We are centrally located with no overnight inventory, right in the middle of value from yesterday, awaiting information from the EIA at 9:30. I'm probably not going to be too aggressive in doing anything here. We do have a B-shaped profile, which indicates long liquidation, which is not supported by the drop in open interest. When we're talking about crude oil, though, remember there are 12, 24, 36, 48 contract months of the next 4 years that contain a whole lot of open interest. So it depends on where that open interest is in the time, in the contract months in the future. That's why I look at the total at the bottom. So we know that overall we added 16,000 contracts in open interest. It's not a huge number, but it's what we have to deal with. So again, centrally located in the medium time frame, centrally located in the short time frame. Patience, Iago. Patience. Take a look at the Nasdaq now. Kevin, except that the big sell-off I was expecting didn't come until after the close yesterday. It happens a lot. You heard on the Make Coke Money, I think I was looking at the idea that I was looking for shorts, and we actually ended up, I think, getting a decent long during Make Coke Money that made the money. But I was, I think I even said out loud, really today I'm looking for opportunities to short, which the market kind of rotated higher all day long, but it wasn't confident. And it, of course, happens in the overnight that we missed the big move to the downside, right? So here's the Nasdaq. The Nasdaq actually got a look at weekly kickoff high yesterday and was rejected. These weekly kickoff levels are really meant to show us where the longer time frame traders are probably going to adjust inventory. We got up there. If there was an inventory adjustment, it was to the short side. If it was longer time frame, of course. We lost 500 in open interest yesterday. So again, lower volume, lower open interest. The upside auction was suffering, and it stopped almost to a T on weekly kickoff high. I think it was within 6 ticks of it. So if we looked for a short up there, we're sitting pretty right now, right? Volume and open interest again lower. Microsoft, it was a good punch in the head for the Nasdaq. Looking at the Nasdaq right now, as far as percentage is concerned, the Nasdaq's down 1.6%, the Dow down 0.8%, and the E-mini S&P is down 1%. So the Nasdaq is certainly presenting weaker now, as it has been presenting as the stronger of the three markets, in my opinion. Take a look at the 30-minute chart here. So here's that late spike. If we were looking at it as a late spike, well, we certainly rejected it. There's that move up to weekly kickoff high. That high was 12.1050. Weekly kickoff high is 12.012. 6 ticks from it. Dang it. And it had to happen at the very end of the day, and we weren't able to participate on the downside, but it's offering us opportunities today. So we are looking at Monday's low which we're testing now in the S&P. So is the Nasdaq really presenting as weaker, or is it still presenting as the stronger? It's had a deeper pullback percentage-wise, but as far as technical is concerned, the S&Ps are testing you for Monday's low. We are not. So watch how this market opens. It's opening out of balance with overnight inventory to the short side. 1700. Yeah. Not sure I can read what I wrote here. The downside target's going to be this naked volume point of control down here. It's that same area where there was the accumulation of volume in the S&Ps. We've got a little bit more work to do to get there. 1700, really our low right here, is kind of central in the target kind of pivotal area here. Okay, looking at these lows here, this current low to me is right in the middle of an area where I'll be looking for executions. Got to see how the market opens, though. Take a look at the TPO chart. We had put in a normal day yesterday in the Nasdaq. I didn't realize that till this morning. In regular trading hours, the initial balance was the low and the high of the regular trading hours. We have a normal variation day, a bit extreme. Very prominent naked point of control up here. This indicates potential change. When we put in a very prominent point of control on a balanced day, the market has used up its ability to facilitate trade there, at least for the time being. This prominent point of control will come into play at some point in the future. Gold, fascinating market this is. So last week's high is resistance as the dollar still continues to hover around that 102 mark. Volume yesterday was a little bit low. We have to remember we're in rollover. I believe we are probably going to be switching to the April contract either tomorrow or Friday. Now on TS Trader and Tradeovate, I believe they've already forced traders to go into the April contract. And I don't understand why, because first notice day where you can be required to take delivery isn't until Monday. The volume this morning is still more than twice the April contract in the February contract. So if you're forced to trade it, be careful. It's going to be a little bit less liquid. But in the February contract, last week's high continues to be resistant. I believe we're forming a balance here, and that is going to kind of create short time frame control, especially during rollover. During rollover, we've got our longer time frame traders working on getting a cheap roll more than worrying about directional activity. This market needs new buyers, needs new business to continue this push to the upside. The upside structure, however, is still intact. Here's the 30-minute chart. Settlements all the way up here, 1935.40. What sticks out on this market to me is the overnight highs have been the high of the recent highs. Okay, if we look at the daily chart, okay, all these highs up here were in the overnight. Markets don't like to leave that. When we see this, we're looking at a market, again, that has largely fallen into range. I'm looking at like 1910 is the lower end of the range, 1940 is the upper end of the range, and we're right in the middle of it. Overnight inventory is to the short side, below value. The bigger trades that I would be looking for would be on the extremes down around 1900, 1904, or whatever this was, 1910, and anything up here. Down here, I'm falling into short time frame control, and I'm going to be patient and reasonable with my potential profit targets. No, Kevin, I never taken delivery of gold just for the novelty of it, although I'm wishing I did when gold was down around $800. That would have been nice. So the balance extremes need new business. Take a look at the TPO chart. Okay. This is regular trading hours only. We know that the overnights have put in our recent highs. Markets don't like that. Yesterday, we put in a poor high. We don't have any excess at the high yesterday, which indicates an unfinished upside auction. Unfinished upside auction. Overnights traded higher than the regular trading hours. This is going to come into play one of these days very soon. I'm hoping very soon. For longs, I mean, if you're long gold, certainly you want it higher. Where do we open? We open below value, but inside range. We have excess at the low, excess, small excess, but we've been moving away from that excess. There's a lot of excess on the lows on the way up here. The market has been relatively organized on the way up. Our first naked point of control is all the way down in 1894, but we've covered all the other naked points of control as this market has been moving higher, except for the one above. So we got a weak high, P-shaped profile indicating short covering and a loss of 1,900 contracts on lower volume. The upside auction seems to be taking a break, but again, the structure says higher. The euro kind of stuck here as well with the dollar around 102. Upside structure remains intact in long time frame, medium time frame, and short time frame. Buyers seem to be struggling to continue moving this market higher. We had an additional 1,700 contracts added yesterday. Volume was lower. Okay. But the open interest again continues to be seeming to bring in buyers. Here's the 30-minute chart. Yesterday, we had a divergence. The market opened, looked lower, and then our divergence started. We started seeing more negative delta as price continued to move higher. We added 1,700 in open interest, which isn't huge, but that delta divergence indicates potential longer time frame buyers entering the market, scooping up what the short time frame traders will give them. So we got the market moving higher overnight, moving lower overnight. Largely, overnight inventory is moot. Last week's high, going to be somewhat pivotal. We've had a lot of struggle at trying to maintain price above that. And again, just like gold, your overnight highs are above the regular trading hour session highs. Again, markets don't like that. Don't like that. So there's going to be that nuance stuck in my head today as I feel my way through this trading day. TPO chart. Okay, we had a normal variation, extreme trading day yesterday. Initial balance, neither the high nor the low. A greater excess at the low, low excess high, low excess highs, low excess highs. The structure to this market says higher. The open interest says there's still interest in coming in at higher pricing. Volume, not so much. Volume, not so much. Keep that in mind as you go through your trading day if you are going to be trading the euro. Here's the 10-year. Look at how nicely positioned our little tennis player is. Center court between last week's high and low. If the ball comes here, he's going to get it. If the ball comes here, he's going to get it. We added 12,000 in open interest off that low yesterday, indicating some potential buyers, but that's a relatively low or inert number for the 10 years. Short time frame control is what I'm expecting in the treasuries until the FOMC meeting next Wednesday. So short time frame influence, short time frame levels. The market opened with a gap. It has now closed the gap. It's got a gap above also, which has yet to be filled, in a naked point of control up here before we even think about getting to last week's high, which is again in the overnight session. Week high in the regular trading hour session up here. Excess at the low. Excess. Take a look at the TPO chart. Excess at the low. Week high. Market seems to be kind of rotating from the lower end of the area of balance, rotating back towards the upper end of the area of balance. But again, we're looking for short time frame levels to lean on, and there's going to be a lot of them. So be patient, careful, manage your risk. Okay. Well, it sounds like I've already worn out the dog. She's snoring over here. All right. I don't know if you can hear her, but it's so cute. Okay. The natural gas structure to the downside. We added 4,200 on this push to the weekly kickoff low. We are now testing last week's low and the weekly kickoff low. Caesar says natural gas screams buy me. Yeah, I mean, this, if we reject below this again, I think you may be right. But at this point, the weekly kickoff low, last week's low are both in play. Downside structure. You would be one of my heroes if you picked this as the low and it actually worked. And anything can happen, right? Here's the 30-minute chart. I didn't put settlement on here, but the settlement is 3057, right about here. We've got a gap. We've gapped through important inflection levels. We seem to be seeing resistance at last week's low here. It would take some real intestinal fortitude for us to try and pick this as a bottom, but it may be the absolute right thing to do. We don't know. Chad, when I'm looking at the open interest, I'm collecting the total of all of the contracts, not just the March. Now, in the mini S&Ps, you can do that until we start getting into rollover, which is only every 3 months. We're a ways away from rollover, so if you're looking at just the March contract, that's okay. But when we get into rollover, you're gonna wanna get the total number. All right. So here's the TPO chart for nat gas. 5 days of balance. Breakout. If we accept below, you've got to go with it. If we re-accept inside value from yesterday, then this may be some really decent excess for us for a potential move to the upside. All right. Caesar, what expiration are you speaking of? April gold has 40,000. Feb gold has 89,000 contracts traded. My dog likes to pass gas when he's asleep. Lacey's really kind of good about that. Oh, nat gas. Yeah, we've got today as the nat gas roll date, but we've already moved into the March contract. Volume took it over, I think, today. Gold roll is scheduled for tomorrow. The nat gas expiration, well, the last trade date would be Sunday. So, at least on the schedule that I'm looking at. All right, folks, let's take our deep breath. stay humble, grateful, and creative today. I'm going to be doing a little bit of shuffling and playing with the dog out in the snow a little bit today. So, but I am looking forward to seeing everybody for the webinar and for Make Hogue Money and for the reflection at the end of the day. Get out there and profit today. Don't forget to be kind to yourself. Keep that internal dialogue positive. Be kind to others. Say a prayer for peace. Get out there, profit, trade well today. Blessings to you all, and I'll see you shortly.